Hey guys, what's going on? Nathan here from nathanargenta.com, and today's video I'm going to be sharing with you an update to my M1 Finance and dividend investing portfolio, and it's going to be for the month of March 2020. So in this updated portfolio, what I'm basically just going to do is just go over any of the changes that I'm doing, some things going on with my portfolio for the previous month, for the month of March. Like I said, go over any changes, any additions, or things that I removed regarding the stocks, any new stocks that I'm adding, or just maybe some things that I'm looking into in the future, as the stock market is currently going right now really crazy, very volatile with the coronavirus getting hit here at home very hard. So just really wanted to go over those topics with you. And this updated portfolio, like I said, I've been doing this now for 3 months. So just you can go to my channel, go to the previous videos that I did for my M1 Finance dividend portfolio. So you can just look up those videos as well. And the platform that I'm using for my investing is with M1 Finance. I will include a link in the description below, which will give you $10 for free for setting up your account and depositing money into it, and get you started for your, like I said, $10 for free to get your portfolio started. And you can also even check out my exact portfolio. I will share the link to my portfolio in the description below as well. So you can just check out the portfolio on your end as you follow along with this video, or even in future videos, and you'll get access to that. So again, those links are in the description below. So to go over the changes for the month of March, like I said, the coronavirus has really hit home here in the United States over the past month, and the stock market has just been doing some crazy things. We're definitely in a bear market right now. Not sure exactly how long that's going to last, based off a bunch of different experts, stock market experts, traders, and advisors. They're not really exactly sure what's going on. I mean, you can do more research in the news section of your M1 Finance account, which just goes over multiple different scenarios and different things happening with the economy, with the stock market, and just even with the global economy in different countries such as Europe or China, and what's going on with the stock market in those areas. So overall, I mean, just if you want to go back here on my portfolio for the month, the month is 13.84%. Okay. For the year, and I just got started in September of 2019. So this previous September. So I haven't been doing this for too long. My portfolio overall is down 23%. It got as high as like 33% whenever things really got crazy. It hit the lows here. All right, hit the lows on March 23rd. All right, and then the market has gone back up. So ultimately, what I'm going to be looking for, and through research by using M1 Finance and the different articles and tools that they have, is really looking into seeing, and trying to figure out, is the bear market done? Is the bull market, is it going to be continuing to rise here like it has over the past week? Last week was the highest gross week, of the stock market in the past 2 or 3 decades. It's incredible the growth that it had in 1 week, going into a week and a half. So closing out the quarter, we are down. I believe the reports were saying 10% overall. But ultimately, what this is in previous recessions or economies that are very disrupted either by black swan events or just through the economy and having a recession, bad financials, different things, what always happens is you'll get these swings of a bear market will come down, and then you'll get a rally. It'll come down, you'll get a rally. Come down, get a rally. So that's what I'm assuming is going to happen. I don't know 100%. I'm not a financial advisor or an expert, so I don't recommend that this is going to, I'm not saying this is going to happen. What just my opinion is that I feel like it's going to go down again, and then it's going to have a rally, just based off everything going on, and the earnings report's going to be coming out for the quarter. I just feel like this is not the end of the sell-offs. It's not the end of the bear market. There is some consolidation here, which I think is important though still. So definitely want to keep your eyes on the consolidation. What I'm waiting for is this market, if it does go back up, there's probably a good chance that it may be in a bull market again. But with this consolidation, it could consolidate and then drop back down, consolidate, drop back down even lower, all right? Or consolidate, drop back down below the previous lows on March 23rd. Now, March 23rd was an incredible time to get in the market, right around there whenever I said most people's portfolios, specifically the S&P 500, the NASDAQ, a lot of those different primary index funds, or even if you are in, like, say, an ETF like the Vanguard VTI, those funds dropped like around 30 to 35%. So that's a good time to just really get in and buy shares, whether you have a Roth IRA account, or if you're just a non-tax deferred account, just like a passive income account like I have. Investing in that whenever you have those dips or big dips, I invested twice of $250 each time. Was when the market hit about 15% right here, okay? And then again, another 15% at around 30% of my portfolio, back around March 20th, March 24th, right around there, okay? So that amount, I was just kind of waiting for around 15%, which is just, for me, 10 to 15% is a good range to start reinvesting and buying those dips. So I'm going to wait for the consolidation here, for it to drop again. I'm most likely going to buy a dip again. All right, so that is two things that I did. Was I bought two of the dips at 15% each, all right, at a minimum of $250 each. So really, like I said, the consolidation has just been there over the past week or two. And it's just the past week, it's been consolidating since it rose up that big bull market last week. So ultimately, my portfolio, we'll just look at the overall portfolio since September. The biggest hit ones that I have is definitely the financial one. As you can see, 49% of it. It was well over 50 whenever the market hit the low just over a week ago. Real estate's gotten hit pretty hard as well. So those two are the worst, the real estate and finance. And then consumer would be the next. So regarding the actual stocks that I have in these different slices for our portfolio, the only thing that I really am looking for, I didn't end up selling any of the stocks I have. I didn't get rid of any of them. I didn't add any new ones, obviously, either, because I have 100 different stocks in my portfolio. So ultimately, what I did was I just reinvested in those stocks that I have at the percentages. I did adjust some of the percentages. I increased the healthcare, I increased the utilities, and I lowered the finance because the finance was getting hard, and it may still continue to hit hard.
That's what she said.
It may still continue to get hit hard because of everything going on. One of the worst stocks that I had performance-wise, and then most importantly dividend-wise, if I go into consumer, was with Darden Restaurants. Okay, so Darden Restaurants, let's go to it here. For the year, it dropped 58%. It was even more, like I said, before that swing back up. Darden Restaurants was really, really hit hard, and this was actually one of my better performing stocks in my consumer. What's a word I'm looking for? My consumer pie. Okay, so in that slice, in that pie, the consumer sector, Darden was one of my better performing stocks, and I had it estimated for the actual target amount of 10% of that sector. So it's dropped the most. There's some other drops. As you can see, Disney's dropped a lot as well. And again, you can look at this stuff on your own. Cisco, which is a food distribution company, they've dropped a lot as well. So like I said, you can look at these yourself and look into them. Like I said, the link is in the description to my exact portfolio to just dive deep and see this and the performance. But not only did it drop significantly, Darden also recently, because of all the closings, specifically entertainment, restaurants, hotels, etc., the restaurant industry is really, really getting hit hard by the coronavirus and all the shutdowns. And Darden Restaurants got hit. A lot of restaurant consumer companies, and specifically restaurants and those types of retail stores that were closed, they've gotten hit very, very hard, and those stores have been closing. Their sales are dropping. they don't have workers working. So ultimately, Darden, which had a really good dividend, is no longer, they're no longer paying their dividends. So I have one of two options. I can, one, continue to keep Darden restaurants in my portfolio, which I still have at the moment, or two, I can sell it because they're no longer paying dividends. And that's the whole goal or purpose behind this portfolio, is the dividend investing and reinvesting those dividends and earning passive income through the dividends I'm getting paid by owning shares, in those stocks of companies. So Darden cut their dividend, as well as multiple other companies such as Boeing, Delta Airlines, Ford. So this is just some other examples of stocks that have cut, right? Companies, stocks that have cut their paying their dividend to their shareholders, to the investors. So just be aware of that if you are looking to invest in those companies, as well as Darden. I'm very close to cutting it out because of that, but I feel like I should wait it out because Darden is going to, I feel like once things calm down with the coronavirus, COVID-19 here in the United States, they're going to start paying the dividend again. And I don't want to just cut it completely because it is a great company in regards to paying the dividend and the growth and the potential. And I mean, for right now, the price is so low compared to what it was. If I keep reinvesting money into it, the growth just from away from the dividend side could be incredible. Okay, so that's just something to look at. Some other stocks I'm thinking about adding because of that, like I mentioned, other ones was Delta Airlines. I'm thinking about adding that into my consumer. But right now, just the airline industry is really getting hit hard. I don't really see anything changing. And with Trump extending the stay-at-home order till the end of the month here for April, till end of April, I don't want to really add any new stocks. The only thing I would really potentially add, which I'm looking into right now, are a lot of the technology companies, because those are really the only ones that are not getting hit the most or hurt the most in this pandemic, because people are relying on technology regardless of what's happening in the world. Technology is vital, especially now with people having to stay home and use the internet, use those resources and softwares for their business or for in their personal lives. It's a great resource to have technology in your portfolio. So if you don't have it, add it. I'm investing more money in my Roth IRAs for technology and for my wife because of that. Just technology is the future, and as you can see, that it's one of the sectors that are growing. Actually, my retirement account, that sector's starting to grow, where the other ones are still getting hit pretty hard. Okay, the other ETFs that I have. So that's really the only thing that I most likely will change, if I change anything right now at the moment, would be related to the consumer. I am still looking at IBM. I mentioned that in my last video as well. So still, again, the nice thing is with everything going on, I'm maybe losing money or the dips, I'm still getting paid dividends on the shares that, the company that I have shares in, owning the stocks. I'm still getting paid those dividends, and which is the ultimate goal, in reinvesting those dividends, all right, into my account. So ultimately, that's just really, really what I wanted to just share with you today. Is nothing really major. Some of the changes I'll be making is based off Darden restaurants here in the near future. I did buy two of the dips at 15 and 30%, all right, at $250 each. I did invest another $500 into my account, but I did deposit $500. I didn't invest it yet, though. I'm waiting for this consolidation, like I said, to end, and waiting for the dip again, which I'm assuming is going to happen. I'm not an expert or financial advisor, but I feel like this sell-off is not done yet. The bear market is not done. This is just a spike to draw people's attention, and then it's going to dip again. Okay, so that's what I feel like is going to happen. If you are interested in using M1 Finance, like I said, I highly recommend you check out my portfolio. I will also include a link to that, as well as how to get started and create your M1 Finance account for free and get $10 to get your account kickstarted just by using my referral link. You'll get $10 and I'll get $10. So I thank you for doing that in advance. And last but not least, make sure you guys subscribe to this this video here if you did like it. If you subscribe to my channel, hit the like button, leave me a comment below. Let me know the value that received, maybe any questions or concerns that you have with my portfolio or with your portfolio in particular. Thanks so much, guys, for watching. Make it a great day, and I will see you in my next video. Take care.